Target just out with earnings this morning. Watching the numbers, the company beat on every metric and pretty significantly, too. Earnings per share, it was a beat by about 20 cents. Comparables came in up 12.7% versus the 8.2% the street was expecting, and versus up 21% a year ago. So on very strong growth. Same-store sales up by 9.7%. Digital up by 29%. But as you can see, the reaction of the stock, a little bit of disappointment. That stock down by about 4.25% right now, maybe talking about the very high expectations that investors have at this point for any of these retail names. Joining us right now to talk more about it is Brian Cornell. He's Target's chairman and CEO. And Brian, looking at the results, it's stronger than the street was anticipating by a long shot on every metric that I've seen so far. What happened in the quarter?
Becky, I think the team just continues to deliver growth on top of growth. And I think this quarter we printed some of the best numbers in retail. To think about our comps up almost 13%. Stores continue to perform really well, up almost 10%. Our digital channel grew by almost 30% on top of 155% last year. And it was all driven by traffic. Traffic was up 13%. So we feel really good about the momentum in our business. Every one of our 5 key merchandising categories grew by double digits. So tremendous momentum in our business. And we continue to see a guest who is shopping at Target, shopping all of our categories, using both our stores and our digital channels. So we feel great about the performance and are excited about the holiday season.
You're raising your guidance in terms of same-store sales, what to anticipate for the fourth quarter. Is that because of what you've seen in the early days?
Well, I think it's just the continued momentum we've seen in our business for 7 quarters now during the pandemic. And I think America has come to trust Target. The investments we made in safety and our team to support the guests, I think we're being recognized each and every week. So we're anticipating a really strong holiday season.
You know, for a long time, the street was kind of looking to, okay, when are shoppers going to go back to their old pre-pandemic patterns? When will they disappear? When will traffic disappear? And that didn't come to be true. Now I think the question is, when does inflation really hit the retailers? When do they get squeezed by the higher costs that we're seeing everywhere? Because they've managed to hold off on their profit margins and look pretty good to this point. But the question becomes, when do things get tougher to manage? Your operating margin for the third quarter was 7.8% versus the 8.5% that it had been a year ago. So maybe a little bit tougher. What are you doing to manage inflation right now?
Well, one, Becky, we made some important investments in our business. Investments in supply chain to make sure we have the inventory for the holiday season. Investments in our team, and importantly, investments in value. And if you think about our business model, our proposition, going all the way back to expect more, pay less, value is a very important part of what we bring to the consumer each and every day. So we want to make sure we continue to reinforce our value position. And during inflationary times, we want to make sure the consumer is coming to Target knowing we're going to provide great value.
When you say you made these investments in your supply chain, you're talking about the 30,000 supply chain employees that you hired? Or are you talking about the additional ships that you've chartered to get things here for the holidays?
We made a number of investments. Obviously, we chartered our own ships to make sure that we could get inventory into the right position. We've been working very closely in the ports to make sure we're unloading our containers, in off-peak hours, but really making sure that we've got inventory in our system. Our inventory in the third quarter was up $2 billion, or almost 20%. So obviously, we want to make sure we've got the inventory in our system to support the incredible demand we're seeing.
In terms of that inventory, the inventory being up and the demand being up, I think that's part of the question. People have been saying the supply chain has been the issue, but I think part of it's been such strong demand for the consumer, too. What do you see just in terms of consumer demand across the country?
Well, I'll just look at our business. For our comps to be up 13% on top of over 20% last year, there's just continued demand in the system. And we're seeing it across all of our categories. So it's a consumer that is feeling confident right now. They're shopping in stores. They're also shopping online. They're spending across multiple categories. And we expect that to continue into the holiday season. So we're going to make sure we've got the staffing in place, the inventory in place to meet that demand during the holiday season and continue to grow market share. And we've been growing share throughout the pandemic. Last year, we added $9 billion of share. We continue to put share on top of last year. And we expect during the holiday season, it's going to be a consumer and a guest who is excited about celebrating the holidays, and we're going to be a big part of that.